Silver crashed on Friday. And if you hold silver, gold, mining shares, energy stocks, or broader market funds, this matters. Because Friday was not just a bad day for silver. It may have been the market telling us that the next phase will be harder, more volatile, and more selective than the last one. Oil surged, inflation came in hotter, retail sales weakened, equities fell, and silver, which had looked ready to break away from gold, suddenly reversed. So the question is not simply why silver fell. The question is what this means for the weeks ahead. Is the silver rally over? Is inflation becoming a bigger threat? Is the Fed now trapped? And what levels should investors watch next? And that is what I want to cover today. Because only a day earlier, I published a video asking whether silver could be about to leave gold behind. That video was speculative. It asked a question. It was not a prediction. Friday gave us the answer, at least for now. The answer is not yet. But it did not kill the silver story. It changed the conditions. Welcome to the 2% Brief. If this kind of analysis is useful to you, please like the video and subscribe. It helps the channel reach more people who are trying to understand what these market moves actually mean. So let us start with the pattern, because the pattern matters more than any single price move. Gold finished the week at $4,541. That's down 3.8%. Silver finished around $76.02, down 5.5% on the week, although Friday's fall itself was much sharper. Platinum closed around $1,990, also down 3.8%. And Bitcoin fell to $78,250, down 3%. Equities, at the same time, also weakened. The Dow fell on Friday 1%, the S&P 1.2% fall, and the Nasdaq fell 1.5%. And the good old FTSE here in the UK was down 1.7%. But oil moved the other way. Brent crude rose to $109, up 3.4% on Friday. And WTI crude rose to $105, up 4.25%. So, metals fell, crypto fell, equities fell, but oil rose. That is not a normal risk-off pattern. It suggests the market is pricing inflation pressure and growth fear at the same time. And that is the uncomfortable part. Silver fell while the inflation problem became more difficult. Now look at the data. CPI came in at 3.8% year over year, up from 3.3%. Core CPI rose to 2.8, up from 2.6. Producer price inflation came in at 6%, up sharply from 4.3%. Then retail sales came in at 0.5% for April, down from 1.6%, and retail sales excluding automobiles were 0.7%, down from 1.9%. So the picture is not clean. Prices are rising, oil is rising, but consumer momentum is weakening. That is the trap. If inflation keeps rising, the Federal Reserve cannot easily cut rates. But if growth weakens, markets will start demanding support. That is why the next move in gold and silver may depend less on simple precious metal sentiment and more on whether markets believe the Fed is losing control of the balance between inflation and growth. Now let us deal with China. President Trump-Xi summit did not produce the clear market-moving announcement many investors wanted. There were signs of progress, but no decisive trade breakthrough that allowed markets to confidently price stronger global activity. And that matters for silver. Silver's been rising partly on the idea that better trade conditions could support manufacturing demand. This is what separates silver from gold. Gold is mainly monetary and safe haven. Silver is both monetary and industrial. We know it's used in electronics, solar panels, electrical systems, vehicles, and modern infrastructure. But on Friday, the market did not get enough confirmation. It had priced optimism. It got uncertainty. So silver gave back the premium it had built. Now, I want to add something carefully. The soundings I've received from contacts with links to the Trump White House suggest that some deals with China may have actually been reached privately, but are not being fully announced because part of them may be politically difficult for the MAGA base to accept. even if they support more production inside the United States. Now, I cannot prove it, so I'm not presenting it as a fact. But I mention it because markets often react first to what is announced publicly and only later to what has actually been agreed. If undisclosed agreements involve Chinese purchases, tariff relief, energy, manufacturing, or production inside America, then silver's industrial demand story certainly does not disappear. It simply gets delayed. But for now, we have to work with what is confirmed. Inflation is hotter, oil is higher, retail sales are weaker, and the China summit undelivered against expectations. That is why silver was hit. But a failed short-term catalyst is not the same thing as a failed long-term thesis. Friday did not fix silver supply, did not remove industrial demand, it did not make inflation disappear, and it did not give the Fed an easy way out. That is why the next levels matter. At this week's closing prices, gold at around $4,541 and silver around $76 gives us a gold to silver ratio of roughly 60-1. Earlier in the week, silver had pushed that ratio lower towards the mid-50s. Friday pushed that move back. So this is what I would watch now. If the gold to silver ratio stabilizes around 58-60, the silver story is bruised but still alive. If it pushes back above 62, the market is telling us that silver's industrial breakout has failed for now. That gives us something practical to track. Not emotion, a number. The structural case also remains important. The World Silver Survey 2026 points to another annual silver market deficit, with a shortfall projected at around 46 million ounces. There was also a recent explosion at Glencore's Kazhinsk plant in Kazakhstan. Now, I would not overestimate one event, but it reminds us that silver is often produced as a byproduct from base metal operations. When zinc, lead, copper, or polymetallic production faces disruption, silver supply can also be affected. So the supply issue has not disappeared. What changed this week was demand expectation. Markets priced a meaningful trade improvement. They got a managed pause. That is the simple version. Silver still has a strong long-term argument, but the short-term catalyst became less certain. So what should investors watch next? There are three things. First, the FOMC minutes on Wednesday. The question is not simply whether the Fed sounds hawkish or dovish. The real question is whether the Fed sounds trapped. If the minutes show concerns about inflation, energy prices, and financial conditions, gold and silver could stay under pressure in the short term. But if the Fed also sounds worried about growth, the longer-term precious metals argument may in fact strengthen. Second, the flash PMIs on Thursday. These will show whether business activity is holding up or whether higher energy costs and uncertainty are starting to affect orders, output, and confidence. And third, consumer sentiment on Friday. If inflation is rising while consumer confidence weakens, the stagflation argument becomes harder to ignore. That is where next week becomes important. Not because one number will decide everything, but because these releases will tell us whether Friday was just a silver correction or the start of a broader market adjustment. So my conclusion is this. Thursday's video asked whether silver could leave gold behind. Friday told us not yet. But it did not end the question. It raised the bar. Silver now needs confirmation from trade, from the gold to silver ratio, or from the next round of economic data. Until then, the message is discipline, not panic. The silver thesis has not been destroyed, but the next phase will need to be watched more carefully. That is why in Sunday's Inner Circle briefing on Substack, I will be setting out the key pricing points for gold, silver, oil, and the wider macro picture for the coming week, including where this pullback still looks constructive and where it starts to become more dangerous. The link is in the description and pinned comment below. Now, if you found this useful, please like the video, subscribe to the 2% Brief, and let me know in the comments. Was Friday's silver fall just a correction after a huge move, or was it the first sign that the market has changed direction again? Thank you so much for watching. Please view my latest videos on screen now, and I'll speak with you again very soon.